Hey, g'day folks. Dean here, passive income coach. And look, welcome to this crypto trading course. This has been a little while in the making. It's come at a very busy time for me at the moment. So I do apologize for those that wanted to get started really quickly. If you're just seeing this for the first time, and then obviously you're not really sure of the history, but look, I have been trying to get this trading course up and out for quite a while now, but right at the same time, I'm actually in the process of buying a house, sticking it on the back of a truck and relocating it around about 700 kilometers away, and so that's sort of taking a lot of focus for me, in my life right at the moment. So it has taken me a little while to get this trading course up and running, but what I really wanted to do was kick this lesson off and really get it started. So I'm just going to start with a bit of a background about me, how I got involved in trading, what I'm doing, what the trading course is all about, how you can be involved, and we'll actually get you started tonight on getting a trading account opened, as well as into some charting and how all that's going to work. So look, before we get started, a little bit about me. So I actually started trading back in the year 2001. I started teaching myself 2001, and I learned through a process called swing trading. So what swing trading is all about is trying to, through what we call technical analysis, so through chart reading of what markets have done, get an idea of which way markets are moving, and then try and trade in that direction. And also look for signals as a result of the charts that can help you along the way. So for me, I'm very much what we call a technical style trader. I don't really read a lot into what we call fundamentals. So fundamentals is the other side of the equation, which is all about the background, the company information, the coin information, if we want to talk just in cryptocurrency, what the coin's going to do, what the market impact is, all that sort of stuff. That's what we call a fundamental approach. A technical approach is you simply, you look at a chart, and the chart tells a story, and then as a result of understanding that story, ideally, you can make profit. And so I'm very much a technical analysis approach. I do very little, and I will not cover any sort of fundamentals on this particular course. It's all about really the technical side of stuff. So I traded through the 2001 to 2003 bear market. I did okay out of that, made a little bit of money, probably double the money that I put in to start with. And then I just traded on and off right through up until about 2008. And then in 2008, I was actually quite bearish at the start of 2008, right during the boom period. And I was putting trades on expecting the market to turn. And it did turn, but my timing was slightly out. And I also went overseas to... I served some time over in the Middle East. I'm an ex-military member. So that coupled with some timing and the GFC, that really just put a halt to my trading at the time. And I never really got back into it. Since cryptocurrency has come along, I've been dabbling in a few different things in cryptos. And it's how for most people that are part of this course, that's how obviously we cross paths. And to be honest, like seeing the crypto stuff and the trading stuff and the volatility and the market movement, which we're all going to cover on this course, it's got me quite excited again about trading. So I've put out the trading courses, gone back over what I used to do, gone back over the theory again. So it's taken me time to refresh the mind, but generally once you learn it, you don't forget it. So this really is a skill for life. What I'm going to teach you isn't just crypto related. This can be applied to any market, precious metal market, the soft commodities market, hard commodities market, stock market. It's all the same. So what you're going to learn on this course can be applied to any market, including the Forex market, that has of interest to you. What's a great advantage in the crypto market is the small amount of money you can play with. When I started in what we call the commodities market, so commodities are things like, sugar, coffee, pork bellies, orange juice, wool, cotton, all that sort of soybeans. They're commodities, agricultural type products. And but to play in that market space, you basically needed a $10,000 account. That was the minimum just to get started and to play in that space. And the great thing about those sort of markets in the contracts market is what we call leverage. So, you know, a small component of your account can leverage massive results. So what crypto brings is you can actually start with a small amount, because the crypto can be broken down into such small, tiny increments that you can trade with literally dollars, but still return a percentage return. So that's really, really important. It's really exciting for new players that want to really test the market, because if you do well in the crypto market, say with a $1,000 account, and you generate consistently, you know, 1 to 2%, you know, per week, you know, geez, even if you just generated 1% per month, still a 12% return per year, and you're doing better than the market. But let's say you could generate, you know, 1% returns per week. You could do that in any market, the Forex market, the commodities market, the stock market, using the same skills. Okay, so that's really important to know. This is not just crypto related, but what I'm going to teach you can be applied to any market. So look, let's crack on. That's just a little bit about me and where we're going. So this course is basically 12 lessons, and this being the first one, the introductory lesson on how to get started and how to get set up. And then the first 3 lessons of this are basically free. It's obviously my marketing campaign to show people that there's some knowledge here and there's some course value, and that sort of stuff. But if you want to go on and you know, learn the other lessons and learn the real skills, then you need to be part of a Facebook community. So let me just get me off the screen, and let's start sharing the screen a little bit. There we go. So so this is what we're going to cover. All right, how to get started. This is lesson 1, how we're going to get started. So we're going to actually open up a trading account. We're going to open up a charts account tonight. I'm going to assume that everybody actually already has a crypto account. Now, that's a big assumption, because you might be just scrolling through this and see this on Facebook, and you want to get involved in crypto, and you don't have an account. So look, below this video on YouTube, there will be a link to opening a crypto account. Now, if you don't have one and you don't know what I'm talking about, because I'm not going to go into detail here, leave a message in the comment section down below, and I'll send you a link on how to open a crypto account. Okay, and then you can watch a separate video. But I don't want to take up time for people that, because the majority of people that have this will already have a crypto account. So whatever crypto wallet account that you have, great, that's all you need. We won't be using the large exchanges that newbies generally get involved with. So when you generally open up an account, the way you have a wallet is also generally in an exchange. I don't recommend that you use those, because the fees will just kill you. So we'll cover all of that, how to transfer your money into an actual exchange account, and then how we use the trading software as well to be able to do it. And both of these are free to sign up to, so there's no cost there to do that. In the next lesson, which I'm going to try and hopefully get out this week, is basically what a chart looks like. Okay, what the indicators are on a chart. Probably a bad word there, indicators, because there's a whole series of indicators which we'll look at in lesson 7. But what we call what the little marks are on a chart, basically, whether we call them candles. Most people seem to be leaning towards candlestick charts at the moment. I'm a little bit more old school. I prefer an open high low close style format, though I am sort of converting myself across to candles. So we're going to cover that, what they mean, what story they tell us, and everything that's related. And then we're going to kick off basically our first sort of lesson in the technical analysis component, which is all about trend lines, support, and resistance. And that will give us a bit of a feel for how all this plays out. And really, those are the 3 free sessions that I'm going to offer to people as a bit of an intro. And then if you want to continue on and keep learning the lessons, then you pay a small fee to do the rest of the course, and that basically gets you access to our Facebook community, which I'll cover in a second. All right, and these are the subjects that we're going to cover off on. I'm going to go through them all, but basically give you all the skills necessary to be able to start trading and start small and grow and develop your skill over time. The biggest challenge with trading is basically right here. It's in your head, because the more you start to learn, the more opportunity there is for you to start questioning yourself. So right here towards the end, the last 2 lessons, market psychology and your trading plan, are probably the most the two most important lessons, because if you can get those two right, this is really just filling out your marketing plan, okay, or sorry, your trading plan. And the market psychology is giving you the skill set to be able to deal with when you come up with a series of losses, and you will, as well as when you're making a lot of money very, very quickly, how not to throw that away. So we will be having a bit of a chat about the market psychology as well, and then we'll finish off with the trading plan. So this course is 0.02 of a Bitcoin. I believe, and really, there's no reason why I couldn't make this as a bit of a guarantee. But I honestly believe if you can't make 0.02 Bitcoin from what I've taught you over the period of 12 months, then I'll give you the 0.02 back. Okay, so there really is no risk for you to do the course. It's a very small fee for the knowledge that I've got. I've probably paid close to, $60,000 for what I'm going to give you in 12 weeks. Obviously, I did it over the course of 2 years, and I've just sort of condensed that down into effectively about 12 hours. And obviously, the knowledge won't finish there, but it'll allow you to at least get started. And honestly, if you can't make back 0.02 of a Bitcoin over a 12-month period, if you just follow all the steps that I show you during this, then trading's obviously not for you, and I'll give you the 0.02 back. It's that simple. All right, so there's my price back guarantee for you. Now, what could happen, and this is something that I've only just sort of recently added into the mix, is you might go through the course and you really love it, which I think is great. I think this is a skill for life. I would love this to have learned this in year 11 and 12, let me tell you. This really is a skill for life, but you may not have the time to trade, because there is a time factor to trading. Okay, you definitely will need the time to put aside to charting, looking for signals, doing analysis, running it against your trading plan, whether or not it fits. And if you're just doing one market, well, then it could be weeks between trade signals. So really, you want to be running a number of different charts, which again adds to keeping up to date and all that sort of stuff. So there is a time factor involved. I would highly recommend that if you really want to get involved in trading, that you look to make 1 hour a day. Okay, if you can do 1 hour a day, update your chart, look for signals, especially in the early days when you're going to see a signal, and then you're probably going to have to go back to the lesson and go, oh, that looks like that, and then go back to the lesson, watch the lesson, and revisit it. It will take time, but you will develop that muscle over time. So I really am asking for 1 hour a day. Now, some of you won't be able to do that, and that's cool. So what I'm going to do is I'm going to put together a trading fund, a separate one to my personal account, put together a trading fund, and we basically just split the returns on that. Now, your joining fee to join the Facebook group covers both the course, okay, if you watch the course and trade on your own, great, but it also covers your joining fee to being involved in the trading fund. Okay, so you can do a combination of both. It's the same joining fee. All right, so it's a joining fee to join the Facebook community. You can do the course and then, flick your coins over and I'll trade on your behalf, or you can do the course and put a little bit in. You can do whichever way you want. All right? I'm trying to make this as flexible as possible, but I really want an opportunity for you to learn on the way. Okay, so once the course is done, I'll be doing weekly updates on what I'm doing, how we're trading, what are the signals, why we're doing it, so you can actually enhance your learning at the same time. And then down the track, you might say, you know what, Dean, I think I can trade better than you're doing, so I want my money back and I'm going to go trade it myself. Again, you can do that too. All right, so that's what this course is all about. And so if that's of interest to you and you've watched the 3 free lessons, you want to get involved, then again, just hit me up on the Facebook community down below and ask to join the group, and we'll get you involved. All right, so let's sort of crack on. So they're the lessons that we're going to cover. What I want to make sure now is that you have access to an account. Okay, so there's 2 things we're going to need. The first one is an exchange. Okay, so an exchange is where we move coins from one coin to another coin. So I prefer to use Binance. Okay, it's probably just the quickest and easiest market to get on at the moment. Bitfinex is probably the largest and most popular exchange, except it's very, very difficult to get on and open an account with. So at the moment, Binance is open to anybody, so you can join Binance at any time. And again, there's links in the video. Just click the link, follow it through, and go through the sign-up process. In fact, let's just do that together because I'll actually open the group Binance account, just so I've got a separate account. Okay, so take the link that I shared with you, click that link. Oh, I might need to log out. That's probably going to help. Yeah, all right, so let's get rid of that. Let's log out of here. Doesn't like it when you're logged in. All right, let's try that again. It's a fairly straightforward sign-up process, obviously. Okay, so we just simply go register. Okay, register your email. Okay, stick in a password. All right, this will be a referral link. I agree and register. Now you get this little square here. It took me a while to work out what this was, but you sort of drag it across. You put the shape over the thing. That's just obviously just confirming that there is somebody on the other end of the computer. And they'll send you a confirmation email. All right. So we'll let that come through. Whilst we're doing that, the other thing we need to do is open up a trading account. Okay, so I'm going to open up a trading account at the same time. There's a link in the box. So I'll at least have both of those operating at the same time. Again, I'm probably logged in, so let's see how that goes. Yes, I am. That's my Litecoin chart. So let's sign out and close. Let's try and log in again. Okay, yeah, welcome. TradingView offers it. Okay, so with TradingView, you get the option to just have a basic account, okay, which is free. That's all you really need to get started, okay, and then later on you can upgrade to a pro account and pay a small monthly fee, and you get more features, more charting ability, all that sort of stuff. But right now, for the course, you just need a free account to get you started. Yes. Where's the sign up process? Interesting that it brought it straight through to an actual chart. It's a little bit weird. How about we just type in tradingview.com. Join for free. Okay, email. We'll use the same one. Username. Oh, I think I already used that username on my other account. Passive income. Password. Read and agreed. I'm not a robot. Sign up. Amazing income group. There we go. Okay, so now I've got 2 activation links coming. Still refresh. And like anything, when you're trying to do a video, you know, the computer doesn't want to play. Here you go. Well, we've got the TradingView one come through. That's great. So let's activate that. Okay. All right, so that's done. All right, so this is our trading view. Let's just get rid of, that's the same one. Let's just get rid of that. For whatever reason, we haven't got the, oh yeah, and there's Binance. All right, perfect. Let's verify your email. Okay, great. All right, let's log in. Now, what's important with Binance in particular, always make sure that you're on the right website. Okay, so I always just double check up here. Sometimes you'll see a few of the letters will have a dot underneath. It's actually a fake website. Okay, so be very, very careful. Always check, because the Binance account in particular is where you're going to hold your cryptocurrency. So like anything where your money is stored, be very, very diligent in making sure that you're on the right account, okay, or the right website. So I always just do a double check. Make sure that it always looks like Binance, nothing before or after Binance, Binance, however you want to pronounce it. No little dots or any unusual markings or whatever, and also make sure it's correct here, okay? And you'll always be asked to make sure and check that it's accurate. But this is where you want to check to make sure it is accurate. Okay, just click on the thing to make sure it is, and you'll notice that the screen actually highlighted the login button. This is my personal account. I need to add in the one we just created. Okay, and log in. Okay, so again, make sure you're visiting the right account. All right, yes, understood. Never install any browser plugins associated, all right, because they don't send you any. Okay, never make any phone calls to anyone that claims to be from Binance. Never disclose your password or authentication code. Never make transactional or send funds to anyone who claims to be a member of Binance support. And be sure to pay attention to the above safety precautions. All right, understand and continue. Great. All right, and then you're in. All right, we strongly recommend you enable 2FA on your account. Please, how you wish to choose it. All right, if you haven't got Google 2FA installed or Google Authentication installed, I'd be surprised, especially if you already own a crypto account. But you can do it quite simply. All right, so I already have Google Authenticator. So what does it look like? So Google Authenticator, it's this one here. All right. All right, you can just download that, just Google it. All right, and when you come in, it just gives you all the different authentication codes, and they're constantly changing over time. So I have one for Binance. I'm not going to add a second one because I've got my primary account on here at the moment. I'll add a oh no, we can do it. I can show you how to do it. All right, so if we go Google, we're going to go Google Authentication. Yes. I have already installed the app. If you haven't, okay, you can go through that process. Yes. And you see it brings up a QR code for you. So in your authenticator, all right, I can just simply select the add new. All right, so I put add and I'm going to scan the barcode. All right, so now it's looking for a QR code. I'm just going to scan that over the thing. All right, it'll find it. All right, now you'll notice that I've actually got two Binance accounts. Okay, my personal one and the group one. All right, and obviously I need to make sure when I'm logging in that I use the correct one. All right, please save this key on paper. This key will allow you to recover your Google authentication in case of phone loss. Okay, so let me take a photo of that. Okay, yeah, so we've done that. Step 4, it's actually checking to make sure that you wrote it down. So let me just type that in. Okay. Invalid key. AWXX. FUJULBZKC 4HIK. Okay, login. And the Google authentication code. So what actually happens with the Google authentication code is it's just constantly changing. So in this scenario, all I'm doing is just keying in the last 6 digits. All right. And it changes about every 15 seconds, 20 seconds, it changes. So it's authenticating, obviously, that I am the person that I claim to be. Okay, so if you already use Google authentication, fantastic. I think you should use it for any time where you store crypto. So I use it on all of my platforms, whether I'm mining, trading, whatever the case may be. I always have 2FA, two-factor authentication, installed. It's just a safety precaution for you. All right, so now I can get rid of some of these little extra excess boxes. So this is our account. Okay. I've enabled the Google Authenticator. All right, if you want additional level of security, you can actually do an SMS authentication as well. So what will happen is you'll do your 2FA to actually get on, and then if you want to change anything on the system, it'll actually then send you a code, which again, you got to punch in via an SMS. So it's just a third level of checking. Again, when I get a decent amount of coins, especially for the group, if we get upwards of over 1 or 2 Bitcoin, then again, it's just another level of security that we want to add in. All right, so by now, if you've gone through that process, you've got yourself a Binance account open, and you've got yourself a trading view account also open. All right, so what does this mean? In the exchange area, we're going to have a chat about the exchange in a minute. This is where we're going to start off with. We're just going to start in the basic section. If you wanted to move some funds across, so right now, obviously our balances should be 0 across the board. Okay, we haven't transferred any coin across. We haven't bought any other coins. All right, if you want to deposit money, okay, select a coin that you want to deposit. Okay, you can deposit in pretty much anything. Okay, so for me, we might deposit in some Bitcoin or some Bitcoin Cash. Okay, so let's say we want to do some Bitcoin Cash. All right, it'll then give us the code. Okay, there's your deposit address. Again, move that in. So again, I'm assuming that people already have a basic level of knowledge of crypto. If you don't understand how to send crypto from one account into your account, then again, just drop a message down below and I can send you a small code on it. But I'm going to make the assumption here that most people know how to actually send coin from one account to another account. Okay, so you can do that from your crypto wallet. Okay, whatever you're using, send in the deposit address, put it off. Okay, within an hour or so, you'll have your funds available. Same for withdrawals in reverse. All right. Now, orders are how we actually place, and then track what orders we have. So what might be handy is for me to log out of this one, because there's no money in this one at the moment. And let's log in to my personal account. It's just got a bit of history in it, so we can have a bit of a look at it. 2FA. Okay, so this is my personal account. So again, if we come over here to our into our balances, all right, you can see here that I've got some Bitcoin sitting there that I'm playing with at the moment, and I've got some other coins. Okay, so these coins are actually what I'm trading. So we buy coins, we sell coins, right? That's the whole idea of the game, right? And so these are the coins I'm currently trading on. Now these actually came through my auto bot. We might talk a little bit about auto bots in just a bit of an add-on session for people that are interested in auto bots. So these are bought from my auto bot, and I'm waiting for these to clear. Most of these are in a loss scenario at the moment, so I haven't closed them out. I'm just letting the bot play its game and do its thing, and eventually they'll just close themselves out. And so now I'm only trading my personal trades that I find through the charting process. Okay, so over time you will start to buy coins and sell coins, okay, from here. Again, everything else is still the same. Deposits, withdrawals. Okay, you can see the orders that are currently done. I'm surprised I don't have, that might have closed out a while ago. Let's see, 29th of May. So let's go back to the 1st of May. Search. Yeah, there we go. So we did a Litecoin trade just recently. And we actually made a loss on this one. All right, so this is just in the last month. We were trading Litecoin. All right, we bought on the 26th of, how do we read this? Oh no, that's the time, the 12th of May. Okay, we bought it at 0.0165. Okay, and we sold it at 0.0155. All right, so we made a small loss on that one, about 6%, or there you go, 5.98%. All right, so you don't make winners all the time. Okay, so that's basically your Binance account. All right, it's just where your money sits and then where we convert it. Now, what's really important to understand here is and throughout the course I'm going to be talking about this, is we're not going to be trading coins against the dollar. Okay, so in a stock market scenario, you'd be used to, the price of something is, $10, and then the stock goes up to $20. So you sell for $20 and you convert from cash into the company stock. Then you sell the company stock and you convert it back to cash. Okay, that's how we're used to thinking. It's just buy low, sell high, but we're doing it in cash. All right, you buy gold at one price, the price of gold goes up. Okay, you bought it for cash, you bought gold, gold goes up, you convert it back to cash, you make a profit. Okay, or conversely, if it went the wrong way and you sold out, you make a loss. But we're constantly trading everything against a dollar value. Okay, that's what we do traditionally. So this is why when I first started trading, you needed a $10,000 account, because you'd open your account. When you buy a contract, the contract might cost you, $600-700. So you'd buy a contract, then you hope the contract would go up in value. You'd sell the contract, and then you'd make a profit or a loss. What's different in the crypto market is we don't do this against the dollar value. Okay, we're trading coins against Bitcoin. Okay, so Bitcoin is the underlying cash asset. Okay, so we're gonna talk and think in Bitcoin value. So what's Litecoin doing in the price of Bitcoin? So I'm not going to say, oh, Litecoin's $175 today and it's going up. I'll say Litecoin, is 15 satoshis and going up or down. Okay, and then we're going to see the market movement, but we're going to be doing that against the Bitcoin value. Okay, and the reason for that is because we start with Bitcoin. We buy a coin that's moving in the direction that we want, and it goes up. We convert it back to Bitcoin, and we've made Bitcoin value. Okay, so our goal for this course, and how I'm going to sort of approach the language in this course, is about increasing Bitcoin. Okay, when you trade in the futures market, the commodities market, the forex market, that's increasing your value of cash. Okay, the cash asset. In the crypto market, we're trying to increase our value of, not value, the amount of Bitcoin. Okay, so it's a subtle difference, but it's really, really important that you get your head around this early, because we're going to be talking in Bitcoin value, okay, or what we call Satoshis. Again, this is some assumed knowledge here that everybody knows that one Bitcoin, okay, is worth 100 million Satoshis. All right, so we're actually going to be talking in the smaller chain. So what you see here is Ether Party. Ether Party is not $1,356. Okay, firstly, that's how many coins I've got. I've got 1,356 coin. All right, or Ether Party tokens, or what we call fuel. Okay, and that's currently worth 0.00961 Bitcoin. Okay, or 960,000 Satoshis, or 961,404 Satoshis. All right. So what we're hoping is that the value against Bitcoin actually goes up. So imagine if this is 0.009 of a Bitcoin, and it goes up to 0.01 of a Bitcoin. All right, so it went from 960,000 Satoshis to 1 million Satoshis. All right, fantastic. We've just made 100,000 Satoshi, all right, or 0.01 of a Bitcoin. So that's how we're going to increase our totals. I hope you might need to go back and just rewatch that section again, because this is really, really important that you get your head around that we're trying to make Satoshis or Bitcoin, decimal points of a Bitcoin, rather than cash. Okay, so just give this example again. So currently, Power Ledger here, for example. Okay, I have 139 Power tokens. All right, and their current value is 0.006. Okay, or 605,000 Satoshis. All right, because it's probably easy to say 605,000. In fact, what we'll generally do is we'll drop the 1,000. We'll just say 605 Satoshis. Okay, and we'll just, it's assumed knowledge that we're always talking in the thousands. So we want to go from 605,000 Satoshis up to 800,000 Satoshis, and we've made 200,000, Satoshi profit. The way we track how we're performing is on a percentage basis. All right, but our goal is to, start our starting platform of, say, 0.5 of a Bitcoin. That's what we're going to start playing with. And then over time, that 0.5 of a Bitcoin becomes 0.6, and then becomes 0.7, then becomes 1, and then becomes 1.4, and then becomes 2, and then becomes 3, and then becomes 5, and then becomes 10 Bitcoin. Okay, that's ultimately the goal through constant trades, making constantly small increases in the amount of Bitcoin or in the amount of Satoshis that we hold. I hope that really, really makes sense. If I've confused the crap out of people, again, just leave a comment below and say, look, you really confused the shit out of me. Can you try and explain it again? And I'll do a supplementary video just on talking in the Satoshi price. But hopefully I've explained it enough. You just got to get your head around from thinking about cash. We buy something, a house for $100,000. We sell it for $200,000. We're converting always back to cash. Well, we're just simply doing it in Bitcoin. We buy this Bitcoin value, when we're selling at this point Bitcoin value. Did we make Bitcoin or did we lose Bitcoin? Obviously, Bitcoin itself, we can't trade against Bitcoin. Okay, so if you're just sitting on 5 Bitcoin, all right, and you want to know whether or not to move it back to cash and all that sort of stuff, that's great. The skills that you'll learn on this course will give you that, but all you're going to do is just simply watch the Bitcoin price. And then when you see that Bitcoin's going to turn down and potentially drop in value, you want to convert it out of Bitcoin, and we'll show you how to do that. And then when it looks like a buying opportunity, you take it out of your holding account, whether that's a hedged account, you've actually sold it back to fiat currency, or you've moved it into Tether, and then you move it back into Bitcoin, and then you get the price growth. So you can do that just with Bitcoin. But for those that want to increase their account, and trade other coins, and a bit of a crypto trader, then you've always got to be thinking in terms of Bitcoin value. All right, so that's our Binance account. So this week, what I want you to do is go and open an account, have it set up, have a bit of a play, and if you're planning to trade, then move a little bit of coin into it. I know there's some people that I owe some coin to. So once you've opened your account, if you can send me your forwarding address and what you want me to do, I'll send you the Bitcoin over to open up your account with. If you're just looking to, at this stage, just do the course and then you'll make a decision down the track, yeah, great. All right. Opening a Binance account is still handy, but you don't need to put any coin in it at this stage. Okay. So just to finish off with Binance, I just want to quickly touch on, we're just going to have a look at the exchange here, a simple exchange. How does trading actually work? Okay. So before we look at this, because this is going to confuse the heck out of a lot of people, let's have a bit of a chat about what a market really does. All right. So an exchange or a market is a place where people come, okay, to bid or sell, or to buy or sell their underlying asset. Okay. So again, in a traditional market, buyers and sellers would come together and they would agree on a price. They'd lock in a price, and then they would exchange their goods and the value for that. In the market scenario, we have two types of people. All right. We have market takers and we have market makers. Okay. Now, believe it or not, I can sit here, it's 9:48 on a Tuesday night. I can sit here and go, you know what, I'm about to go to bed. And the market that I'm in, let's call it Bitcoin. Bitcoin's around about $7,500 US at the moment. I could go to bed going, look, I really want to buy some more Bitcoin. If it went down to $7,400, I really think that's a great time to buy, but I don't want to sit up all night and wait for it to see if it gets there. Okay, so I can pre-place orders into our market, okay, in here. These are all pre-placed orders, top and bottom, all right, for people just waiting for the market to happen, okay? So, so let's say I'm about to go to bed and the price is currently here for whatever underlying asset this is. This is Qtum is the coin here, and I just chose it because it's a slow moving coin. It doesn't fluctuate too much, and when I bring it up live, it won't be jumping all over the place. So at the moment, this was the market value when I sort of typed it in, and I want to buy this if it hits 1350. Okay, at 1350, I think it's good buying opportunity. All right, so that's all the way down here, like at 1357. Well, you know, that's going to be all the way sort of down here. All right, so let's say I think the good buying opportunity is at 1358. All right, so I could go in here and go, look, I've got 100 Qtum coins that I want to buy. If the market comes all the way down here, I'll buy it at that level. All right, so what I'm doing is I'm what we call a market taker. All right, I put my price in, I set and forget, and I wait. Okay, now if the market starts to move up and up and up and up, the price may never get back down to 1358. So I'll wake up in the morning, the price never got here, and my order never got filled. Okay, so I didn't have anything happen. All right, I then make a decision, go, oh wow, holy smokes! I woke up and the price is now at 1510. You know, it might have come all the way down here to 13.582. All right, and but that's as low as it got, and then kept going back up and up and up. I would never have been filled. All right. And conversely, I could do the same. I could go to bed. I think, man, if this ever made 1360, wow, I just made 100% profit. I want to sell everything I've got at 1360. All right, so I want to go in here and sell. All right, and if the market gets all the way up here, right, it'll sell my stock to the market, and I'm out, and I've made my profit. And in fact, you could actually do both. You could actually set it up and say, all right, I'm going to bed, and if this happens, then I want this to happen. But if this doesn't happen, don't do this. All right. So these are all the sort of things that we can, that's a bit of an advanced strategy. All right. So it's a bit of an if then. So we can set all this sort of stuff up in the marketplace before the market actually happens. Okay. So that's really, really handy for those at work or, you know, you come home, you do a few trades, you see some signals. Okay. You can then actually pre-plan out your trading, and then you can walk away. All right, so you don't get caught up in the emotion of watching the trades move up and down to see, oh, I'm getting very, very close. All right, because again, when we do the market psychology section, you'll see that that's not a great way to be trading. Watching the market is not a great way to trade. So how does the price move? All right, so in the course of any one time, we've got sellers up here all waiting to sell at a high price, because remember, the sellers want the best price they can. So all the sellers start putting in the price that they're willing to sell the coin at. And all the buyers are down here going, they want it as cheap as they can. Here's the price I'm willing to pay. And there's a gap, okay? And that gap is called the spread. It's the spread difference between where the sellers want to be and where the buyers are willing to pay. All right, so this is called the spread, and you'll hear this term in market circles. Generally, the actual price is the difference between the two. Okay, so in this scenario, 1359 is the difference between this price and this price. So this is what you would see like on the news. Okay, if this coin was actually on the news, you know, the stock market closed today at 13.59 points. All right, so it's the difference between the spread. Okay, so here we've got sellers. All right, so we've got people all around the world, and there's 3,500 tokens here that people are willing to sell at that price. And we've got some willing to sell at this price, and that many at this price. So these are all people saying, right, I got this many coins, I got this many coins, I got this many coins, and it's a subtotal of willing to sell at these different prices. Okay, and conversely, you got people down here that are willing to buy, at different prices, as they go. So these are what we call market takers. Okay, they'll take the market when it gets there. Right, they'll only take action when the market gets to that point. Now, if that's all we ever had, you'd have this constant, Mexican standoff. Well, this is what I'm willing to pay. This is what I'm willing to pay. And, no trade would ever happen. Okay. So what you have is you have what we call market makers. Okay. And a market maker is someone that goes, you know what? I just think this coin is so good to have. I'm willing to buy slightly above value so I can make sure I get it. Okay. So just like anything, all right, if you think about this, this happens in your daily life all the time. Imagine going into a cafe and you're desperate for a coffee and the guy says, guys, we've only got enough to make one coffee left and there's 2 people waiting for it. All right. You would start to bid up. Oh, I'll pay $6.50. No, I'll pay $7. I'll pay $7.50. The same sort of process is happening here. Okay. So right at the moment, we've got the market saying, right, the price is worth $13.59. You've got the buyer saying, well, I only want to buy it at $13.58, and seller saying, well, I want $13.59 too. Eventually, someone's going to go, you know what? I really want to get some. Okay. So there's 2 things can happen. One, somebody from here can say, oh, bugger it. I'm just going to I'm not going to wait. I'm just going to buy. Or, which is what most people do, they just come in and go, wow, this coin looks really, really cool. Just buy some. Okay. So what will happen is you'll see the price at $13.59. You'll just come in and go, yeah, buy me 300 coins. Bang. You're not going to get it at $13.59. All right. You're going to get, and let's say actually you're going to buy 5,000 coins. I want to buy 5,000 coins. Just buy it. Okay. What's going to happen is you're going to fill that order. So you're going to take 3,500 at that price. You're going to fill all of that. So that's only going to give you 3,656. You're still going to buy another 1,000 or so. All right. So you're going to buy those. You're going to buy those. And then you're going to buy whatever the difference is to make 5,000. So that's going to be 1344. Okay. 1344. All right, that should give us a total of 5,000 coins. So you actually bought 3,500 at that price, 156 at that price, and 1,344 at that price. And then the system will average that out for you based on a weighted average of what you've purchased and said, right, Dean, well done. You've just bought 5,000 coins, and you'll see this in your trade. You just bought 5,000 coins, and you just paid a total of 13,59456, something like that. Okay, there'd be a decimal point in there somewhere. All right, so that's how many I bought, and that's the overall average price that I paid for my coins. Now, what had happened is that these will disappear because I bought all of those out. These would drop down a little bit by that 1344, so let's just call that 45,600. All right, and now the price would go halfway in between this and this. All right, so the price would now jump up to about 13,491.5. Okay, so that's basically how the market moves. All right, now this is important because when prices start to go up quickly, what that means is that people are paying above value of what the underlying price is, and they're driving it up quicker, because as more people start to buy this up, all right, let's say all this gets bought up, price moves up again. Okay, so the price now might move up to 13.59. What's it? 595. Okay. Now all the people down here go, oh crap, market's moving up. Maybe I'll never be able to sell my 415,000 or my 4 million tokens at this price. Maybe I'll go and I'll take some of them here. Maybe I'll try and sell them at 13.590. All right, and I'm going to try and sell 50,000 of them. Okay, so there will be more buyers coming in here. So people will start to chase the market up. All the sellers will be happy, and some sellers are going, oh, maybe I'm selling too short. All right, too soon. So they'll start pushing their prices up. But what drives the market is what we call the market makers. Okay, and they're the people that are coming in that just hit the buy and sell button. All right, I hope that makes sense. Let's have a look at that in a live context. So this is the exact same coin, all right, and I just chose this coin simply because it doesn't have a massive amount of trade volume, so it's not going to be jumping all over the place. So you can see here that this is that was the last sold point. Okay, it was at 13,460, and there was 10 of them purchased, 10.63 coins purchased. So you can see that there's still a total of 37.37 available at that price. All right, that's the amount, and that's the total value. Okay, so there's 37 there, there's 2 there, there's 5 there. Somebody wants to sell 200 coins at 13.505. Now you can see that these are changing. All right, so when you see these flicker, this is just people coming in, adding in some additional totals. Oh, I want to sell mine, I want to sell mine. All right, I want to buy some here. So what I'm waiting is just for this to change. All right, but you can see the spread's quite big. So buyers don't want to pay more than 13.44 and sellers don't want to sell for more than 13.46. Okay, so at the moment, there's a little bit of Mexican standoff. The only way this will change is if somebody comes in and goes, oh, I think this is a really good time to buy, right? And just go, right, simple, I don't know, I want to do it. Is just hit buy, okay, bang, hit the buy button. How much are you going to buy? All that sort of stuff. What price do you want to buy it at? And away we go. Now, you can see here, this is what we call a limit. All right, so the limit is a market taker call. If you just simply say, I want to buy at market price, okay, if I hit buy at market price, that is the market price. All right, not the price you see on any one given day, at any one given time. Now, in this scenario, it happens to be the same because the last trade was at that one. But the actual market value, if you actually went to like a website or whatever, it would say that the market price of this coin would be halfway in between 13.45. Okay, be halfway between here and here would be the actual true value. So a market price is you become a market maker and you simply bang it in. If you've actually sold at market value, you'd be selling at 13.443. All right. So, and you notice how there's some people have added some in here because a few seconds ago, this was at 13.44. All right. Now you can start to see we've got some people coming in, all right, and they're buying up. They're buying up some of the coin and how much they're buying. All right. But you can see people here going, oh, it's not moving. Maybe I need to get closer to this. I've got to encourage some sellers to come and to get my coin. All right. And so they're trying to get people to come down here and buy it from them. Okay, so these are all the people that want to buy, and this is the price that they're willing to pay it at. These are all the people that want to sell and what they're willing to pay. When you and I come in, okay, and we just simply go, right, buy at market value, okay, we get joined to the seller, all right, and the lowest seller at the moment is at 13,460. That's the price that we would pay. All right. When they get sold out, the next lowest price is at 13. Oh, there you go. They just went. Okay. So someone bought up all the 63s and someone just bought up a big chunk of the 467s. All right. So you can see that just forced the price up because someone's hit buy. All right. And they've bought all the ones down here. Okay. If another buyer comes in, all right, and just simply goes, I want to buy. All right. Price is starting to move up again. All right. These will start to disappear as I'll get churned up, all right, and the price goes up. I hope that makes sense. This is so fundamental in understanding price movement because when we start looking at, what these individual little symbols mean, all right, they tell a story, okay, and you need to understand that price movement, okay, or market making is the thing that's driving it. Okay, so when we have these up days, okay, green is an up day, red's a down day. When we have these sort of green days, that just simply means that more people were buying up the seller's choices, forcing the price up. Okay, when you have these red days, it just simply means more sellers were coming into the market, selling off at the price. Okay. So that's basically what I wanted to cover on this first session. That's a lot to take in, especially for someone that's never traded before. You'd be surprised how much info I've actually really given you, even though you can't use a lot of the info yet. But what is there is crucial in your understanding. So I would encourage you just to go back and watch this section again about how market makers work, market makers and market takers actually work. Watch this over here, a bit of the trade history. As I said, I like this one because it moves slowly. If we go and look at something like BTC against Tether. So Tether is like the equivalent of the US dollar. So you watch how quickly this stuff moves, right? So, this is constantly changing, right? This is people coming in, coming out, coming in, coming out, coming in, coming out, right? And our trade history it just moves so quickly, all right? So you can see here there's some sell orders, there's some buys. See how quickly these are moving. This is why I didn't want to show this one because it's just happening so quickly, All right. But it's important to note it's the same process. It's just people coming in, sellers coming in. If there's more sellers coming in, they're going to be driving the price down. If there's more buyers coming in, they're going to be buying up these prices, and away they go. If everyone around the world suddenly thought that $8,000 Bitcoin was really, really great value, and it's at 7,400, you'd just be coming in here buying everything below $8,000, right? That's the same sort of thought process. Just people are just coming in here buying that, buying that, buying that, buying that, buying that, buying that, especially when there's small amounts. Okay, so you can see here that we sold, that it's already sold. People are just selling, 0.05 of a Bitcoin at this price, 0.03 of a Bitcoin, 5 Bitcoin. What'll happen every so often is you'll get someone that's just going to offload, 1,000 Bitcoin at one price. Now, what that does is that halts any price movement. Okay, because what'll happen is as people come in, they've got to slowly chip away at that sort of 1,000 Bitcoin, all right, before it disappears, because it can't go above the value. All right, it's not going to keep going up if there's 1,000 Bitcoin here, because you can imagine if I'm a buyer, all right, and I think 7,434 is a pretty good price. Well, I come in and buy it, but there's still people selling it at $7,435 because there's so much sitting there. It's going to take a long time. There you go, 16 Bitcoin. That's going to take a little while to go through. All right. So when we get up to that price, so these are sometimes you'll get these market movements going up, and then you see this stall period. And generally what will happen is that stall period will be someone offloading or buying a big chunk at a time. Okay. And you'll notice that 5 Bitcoin's already gone. Okay. Wherever that was, I don't even know where that was. That's already gone. All right. So there's a fair bit happening. Oh, there it is. No, it's still there. 5 Bitcoin. All right. So look, I hope that was useful. Get in there, get your account open. You're definitely going to need Binance just simply to have a bit of a play and get a bit of an understanding. So open an account. Don't need to put any money in it, but just have a bit of a look at that. Have a bit of a play around in different combinations. What's the difference between the BTC? Actually, bad example. Let's go Bitcoin Cash against Tether. Okay, so you can see that that's at 1,076. So that's what Bitcoin Cash is worth. All right, but then so you look at that market movement. All right, but what about if we did Bitcoin Cash against Bitcoin? All right. Oh, actually, I don't need this flash in it. Let's go. So that's BCC against Tether. I'm not sure why that's not showing against. Oh, here we go. That's what we're after. BCC, BTC. All right. So this is actually what the market looks like when we're talking Bitcoin Cash against Bitcoin values. This is where you take Bitcoin, you buy Bitcoin Cash with it, and then you sell Bitcoin Cash and get back Bitcoin with it. Okay. It should be a fairly similar. All right, so fairly similar market shape, okay, because everything's really pegged to Bitcoin, but every so often they'll sort of diverge, and this is where you make money, is when they don't follow exactly the same shape. So that's the Bitcoin Cash value. And that's Bitcoin Cash against Bitcoin. So it's a similar shape, but not exactly the same. And this is where we can make some money, because we always trade against Bitcoin, not against cash. Okay, so definitely want to come in here and have a bit of a play. Also, make sure you open yourself up a Trading View account. Okay, in here, once we get into here, where we're going to be playing primarily, obviously, in the crypto market. Okay, so let's just bring up BTC. All right, and let's do BTC against Tether. Okay, which is on the Binance side. And what you want to do is when you come in here is you'll see here, once you've selected your, what we call the ticker, okay, so the actual coin, so BTC against the US dollar tether, you want to click interactive chart. Now, this is what we're going to start playing in, okay, is this in particular. All right. So over the next lesson, we're going to chat about what these different colors mean, okay, what the different shapes mean. Let's just spread that out so you can see it a little bit better. Okay, what are these bars? Okay, what are these daily bars? What are these little symbols down the bottom? All right, how do we read it? As I said, I personally prefer bars, open, high, low, close. It's just the way I learned how to trade, but I am teaching myself how to do the candlesticks as well. So what do these mean? What story do they tell us over time? What's the difference in the period? Okay, so at the moment, this is a daily chart, but what is a daily chart compared to a 4-hourly chart? All right, and what does that tell us? And then, or can we convert the 4-hourly chart to a 30-minute chart? And what does that tell us? Okay, so every one of these has stories attached to it, and we're going to cover all of that on the upcoming lessons. But for now, just open yourself up a TradingView account. Get yourself along to finding this particular chart. So just going to do that again. So you come in here, choose the coin that you want to start with. Okay, probably for most of you, just start with Bitcoin. Okay, I would prefer you to get in the habit of looking, if you're going to just look at Bitcoin, look at it against Tether rather than the US dollar. It'll be exactly the same chart. So find BTC, USD, Tether. All right, click OK and select interactive chart. That'll bring you up to this, and just have a look at some time frames. That's all we need to do for this lesson. All right. That's what a monthly chart looks like. Not that we're going to look at a monthly chart for crypto. All right, so look, that's all I'm going to cover. This lesson's probably gone a little bit longer than I wanted to anyway. So make sure you got those both accounts open. In our next lesson, we'll get our TradingView page set up so we can actually have it. I don't like the white background, but you might. Personally, I prefer a black background. So again, have a bit of a look around at that. And then on our next lesson, we'll go through what do these symbols mean, setting up our TradingView window. So we've got some skills in to be able to do that. And then we can actually start getting into what it looks like and how technical analysis actually works. So look, that's it. I hope that's given us a bit of a kickstart. Get those accounts open. Leave some comments down below. If you've got any questions as we go, please feel free to either drop them on the video page or, more importantly, add them to the Facebook page, and so everybody can then see the comments within Facebook, and I can answer those and deal with those as we go. All right. That's about it. Unfortunately, I won't be able to do a webinar this week. I don't think you'll really need it just to simply get started. But certainly the intention will be after I've done a lesson, give you an opportunity to watch it. We'll then have a webinar later on in the week so you can ask any questions from that once you've had a bit of a play and a bit of a listen. All right, guys. That's it. Take care. Thanks very much. I'm going to make sure that I stop sharing. There we go. And have a great week. And good luck at getting those accounts set up.